Hello everyone, this is Martin. Welcome back to another weekly video. I've been doing these videos for about 2 years now, and I'm very happy and glad for everyone watching the videos. So a big hello to all the new subscribers and my old subscribers from around the world, and right here my fellow traders from Toronto, Canada. So this week we're going to be looking for trading ideas for the coming week, July the 23rd to the 27th, okay? And we're going to analyze all the currency pairs. I'm going to show you how to find winning trade setups and some of the things I'm looking for. And we'll do a couple of reviews from last week, especially if you're following my weekly videos. It's important I do that. And just quickly, last week was a tough trading week. I did have some losing trades. I'm going to go over a couple of them with you, but again, it all depends on if you are a conservative or an aggressive style trader. So the last week, if you were an aggressive trader, you would have had some losers. And if you were a conservative trader, you actually would have made some pretty good pips. So we're going to look at that in just a moment. Before I do that, I'm going to go over to the disclaimer. Okay, just a quick reminder. First of all, everything I provide is for educational purposes, okay? And that means that if you're trading with real money, you got to be really careful. Make sure my trading ideas conform to the way you trade. Again, be mindful if you're an aggressive or conservative trader, and always watch these weekly videos at your own risk. And finally, I just want to remind you, never trade with more than 1 to 2% of your outstanding account balance. Okay? Okay, I'm going to start with the first chart here. We're looking at the Euro USD daily, and you can see here that we are in a downtrending pattern. Downtrending is quite simply shown on the charts. These are called the easy read charts when you see pink below blue. Okay, so you can see clearly here the pink, okay, the pink area, pink zone below blue, and right here is the pullback. Again, I just want to teach you how to read the charts, and very basically. Again, then we come down, we come back down to test the previous swing low, and from here we're going higher. Here we're going higher. So you can see kind of this channel forming, so up, down, and my bias is to the upside for this coming week. I'm looking for buys above 117.26, okay? And for me to even consider a sell trade, price would have to come all the way down below 116.18, but my bias is to the upside. Especially look on Friday, huge, excuse me, a huge bullish white candle, okay? That's a momentum candle. You can also see the blue arrow with the blue dot, and that I teach you in the course. The course is called Forex Success in 5 weeks. At the end of the video, I'll give you more information on that, how you can get some free information, okay? And so that's what I see for this pair. Now we move on to the British Pound USD, and just a quickie lesson on this one. Last week I actually said buy above 132.43. So I'm going to bring this down. Okay, just a second. Okay, I'm going to bring it down to 132.43 approximately, which was about there. Okay, let me just take my crosshair tool. Oh, 132.43. So it's actually right above here. Okay, so now what happened is you can see the price action from last week. Okay, so I did kind of look at a buy above 132.43. I've shown that to you in the blue line here, and you can see on the first trading day, this is Sunday and Monday right here, price did go up above my buy entry area and then came back down, and the next day came right back we had a huge bearish candle. So if you would have, now I talked about being either an aggressive or conservative trader. If you're following my the information I provide to you and my levels, you would have, if you would have placed a pending buy stop above last week when I said 132.43, a pending buy stop above that level, you would have the price would have come to you. You would have been in the trade, and then on after the first candle right here, you would have been in a very small loss. So being aggressive means taking a trade entry above my level if it's to the buy side, or just below my level to the downside. Now, however, if you're a conservative trader, you wait till the candle closes. You wait till the end of the day. So with this candle, you see, it closed right here. It closed below the level I had posted in my last week's video. It closed, and so you would not have taken a buy trade. You see, so just depends on whether you are an aggressive trader. Aggressive trader means that you're basically you're placing pending buy stop orders around my levels. And a conservative trader, if you're conservative, you would wait till the end of the day to decide what you want to do, or switch to a 4-hour chart. You notice that all these charts are daily, so you would switch to the 4-hour chart to see if your the entry makes any sense based on my level. Now, so you would have been a loss on the buy, but I also did say last week, take a sell or look for sells below 130.86, okay? And that is 130.86. Let me just take a look here for a second. Okay, 130.86. So it would have been right about there, okay? And you see with this, so after this is the Sunday, Monday right here. This is the Tuesday. This is the big bearish candle that happened at the end of Tuesday. That's 5 p.m. Eastern Standard Time here in Toronto, Canada, or New York City, because Toronto is on the same same clock as New York City. So, and then taking a sell right after that, you based on my last week's level of taking a sell below 130.86, you would have made some pips on this on the next day's candle. In fact, you would have made approximately 81 pips. So, at first you would have had a loss, and then you would have had a buy, and your net would have been, I'm sorry, you would have made some pips on the sell trade. So you would have been with a net loss of 55 pips, not as bad as the first taking the buy trade, which would have given you a loss of around 136 pips. So just again, just letting you know, depends on what type of trader you are. If you're conservative, just wait till the end of every candle close, okay? If you're a conservative trader, okay? Now let's move on to so for this week, I see here sells below 129.75 and buys above 132.73. Okay, that's for this week for the British Pound USD. Now, Australian USD, take a look here on Friday. We had a huge reversal candle. Okay, we had a bearish candle, but this is also like a bullish engulfing candle because it completely engulfs the body of the previous candle. So my bias is kind of to the upside, but the upside may be limited to this area right here. Or let me just get my drawing tool. See, here's a previous swing high. So taking a buy trade above 74.44, just watch yourself. Your stop loss would be aggressive here. Anywhere around here for your stop loss. So just be mindful of that. If price obviously breaks this previous swing high, it could come all the way up to this blue dash line here. Okay, so that's what I see for that one. And let me take that off. And now we move to gold. I usually talk about gold after the Australian dollar currency pair. Again, we have a reversal. You can see this huge wick on this bearish. So first of all, we have a doji, Okay, so it's a pretty good war or fight going on between the buyers and sellers. The sellers tried to take it down further. Buyers pushed it back up. That's why we have a long tail here. Now, buyers came in right here and pushed it up higher, but right now you have to wait and see. So for me to be confident to see if the price of gold is going higher, you'd want to wait to at least this level. So look for entries above this level, okay? If you think, if you're bullish on gold. Now, the next one we're going to look at is New Zealand USD. Same thing as the Australian. We have a reversal right here. My bias is to the upside again, but be mindful. If it's going to go higher, that's your first target right there. So it's not a huge target, and it's not even a good 1-to-1 ratio, because if you get in above 0.6824 as per my level, price doesn't have much room to move. However, it may go up, down, and then up again. So just be mindful of that, okay? And to the downside, obviously, I've got a level right down here. So my bias is still to the upside for this, okay? And now we move to US CAD. Now, US CAD on Friday. Take a look here. This is the trading last week trading week here. Sunday, Monday candle, Tuesday, Wednesday, Thursday, a huge up candle, and Friday, a huge bearish candle. So right now we kind of wait and see. If you think price is going to go lower, you could look at sells below 131.16 or higher above 132.94. Okay, but kind of it's a wait and see situation. You can see the blue line here, the blue MACD line, which is our short-term momentum indicator. It's pretty well right at 0, so I'm not confident as to where the price will go from here. Okay, possibly lower, but again, to the downside, you're limited to here. Okay, so if price does go lower, it may only come to here, okay? And the next level, if it breaks that, take a look right there, okay? So it does have room to move, but just be aware. And if price retraces, then you want to get out, okay? So let's go on to the next one, oil. Talk about oil after I talk about the Canadian dollar. There's a reversal here, you can see, okay? Reversal to the upside. However, again, not confident as to what's going to happen. We're in a sideways mode. Take a look. Price would have to come above here, above this level, for me to have confidence that price will go higher, lower below here. And if it goes lower, take a look at the previous swing low. Okay, so just wait. It's a wait and see situation. Wait to see if price comes up above here. If it does, then you could look at getting in or switch to the 4-hour chart, which gives you earlier entries and a better indication as to what's going on. Okay, now let's remove that and let's move on to US Swiss franc. Now take a look again. We have this this pattern forming. What is this? Well, it's a kind of a bullish pattern, bullish channel. Okay. It's slowly grinding higher. When what do I mean by grinding higher? Okay, let me take that off. So you see, here's a previous swing high. This high did not exceed the previous swing high. This one did. This is higher than the previous high, but again, it's grinding. So right now, my bias is to the downside. And then you could look at to see if price reverses again back to the upside. So down here, you could look at even a looking at buy trade. Okay, look for one good bullish candle to the upside in this area right here. For me, being a very conservative trader, you could look at buys above 100.26 or to the downside right here, 0.9845. These are conservative levels. Okay, let me take that off. We get to the US Japanese yen. Take a look. Pretty well the same thing. Grinding. Price did make a higher high here. Here's the previous high. So it broke. This was a breakout, made a previous high. Price come down. most likely to test this long-term level here. It's a trend line. Okay, you can see a touch there, touch there, touch there. Every time price comes down to this area, to the trend line, it moves higher. So we can almost expect the same thing. And down here we have major support in the 200 SMA. That's this red dash line, and the convergence of this 89 EMA right here. So there is lots of key support right here. So right here at this area, you want to see if price goes higher. If you're aggressive, you may want to get in as price is turning around. That's an aggressive trader. If you're a conservative trader, you'd want to wait and look for buys above 112.56, and to the downside, you could be looking for sells below 109.64. Okay, so we're moving along at a pretty good clip. Now we're in some cross pairs. The previous pairs I discussed are the major pairs. Most traders actually trade those. However, if you're in Europe or in the Far East, you would also be trading you'd be trading the euro, the British pound, the Japanese yen, you know, and cross pairs. So let's look at that. Now this one I want to look at because last week this was a big winner for me. This was euro, British pound, and last week in last week's video I said look at buys above 0.8864. 0.8864. Okay, so that is, oh, just a second, you drag that down, 88.64, right about there. Okay, so you can see last week on Sunday and Monday right here we had a huge up candle. You could have actually gone in here because this is a reversal I teach you in the course. This candle right there is an aggressive pullback candle. Okay, price went up with momentum after the pullback here. So we have a pullback, we had a momentum candle. Get in right there. Let me just use my drawing tool. Get in right there. That would have been your earliest and best entry. Stop loss below here. The signal, we call this the signal candle in my course, would have gotten in here 1-to-1. You would have made up here, letting your trade run for more profits. You would have made profits up to here, so at least 2-to-1. Okay, so for me, I did say above this line, that this was in my last week's video, I said look at buys above 0.8864. Obviously price did go well above this red line, and this was a good winner, giving me about 78 or more pips. Okay, so let me take that off. And for this week, you could look at look for buys. You could wait for price to come down. Okay, price to come down, then go higher. So again, look for a reversal. However, price may not come down all this way. Price may from here reverse higher right away. And so for a conservative trader, you'd be looking at buys above 0.8962. Aggressive traders look for buys, reversals after a pullback in this area. Okay, and again sells here below 0.8794. Okay, hopefully you're liking this video. Hopefully you're learning perhaps the difference between the conservative and aggressive trader, because that certainly will impact your bottom line. And obviously you're going to trade like your trading personality. Everyone has a trading personality different from another trader. That's why it's often hard to teach traders, because I mean, I may have my own style, the trader next door may have their own style, and you obviously will have your own style, and you certainly will find your style, your trading personality style, once you trade with real live money. Now that's important. Once you put real money on the line, you're going to find out what you're made of, and you know, and what your stomach can take. All it takes is a couple of big losses, and you're going to find that your trading personality will come into focus. Okay, so a couple of big losses, and all of a sudden you become a very conservative trader, to the point that you may not even trade when you see the signals in front of you, you just become too cautious. But that's another story for another day. Here, take a look. Euro, Japanese yen, the next currency pair, it's gone up. Okay, take a look. We had a turnaround, one bearish candle, a bullish candle. That's a early signal for turnaround. Okay. And we call this like a pullback turnaround. One huge candle. What does this big candle mean? Well, that's a momentum candle to the upside, meaning that buyers are completely in control. Okay. And you can see price went up from here. We're in a pullback now. And from here, I'm looking at, let me just take that off. Okay. Looking at buys above 130.60 right here. 130.60 after the pullback is finished. Let me make that clear. Pullback may not be finished, may come back down, may come further. But if you see any kind of turnaround or a white bullish candle above 130.60, you should get in. And that's why I've got this red arrow right here, and the SLW stands for, this is this exact same level I posted in my last week's video. So it's the same level as my last week's video, SLW. Okay, for sells, you could look for sells below 129.87. Let's take that off, and we're going to move right along. We just got a couple more pairs. Euro, Audi. For this one, well, you can see it's kind of a mess. Okay, you can visually see that we're kind of going sideways. Look for buys above 158.87. Look for sells below 156.60. Okay, and our final pair, the British pound, Japanese yen. Okay, and you can see here we had a breakout a couple of weeks ago. Price went up, didn't quite touch the 200. The 200 SMA usually acts as a magnet. Price generally comes right up and touches it, and then often reverses, which is what it did do. However, it did not go all the way to the top. We have a huge pullback. This is a pullback. This is not a reversal. Okay, so just keep that in mind. From here, price certainly could go higher once again. So we have the start of, you can see here, up, down, up. Okay. And if we're looking for buys to the upside, we're looking for buys above 148.14. To the downside, below 146.12. Now, to the downside, price breaks below this, it certainly could come back to the trend line, which I started up way back here. Okay. So could come down to here and then back up again, and you would have to wait a couple of weeks to find out. But right now we're just in the pullback, so keep that in mind. This is not a reversal just yet. Okay, and those are my levels I posted right there. So hopefully you've gained just a little bit of knowledge from this week's video. Hopefully my videos aren't too long. Okay, but even if they are, there's always something valuable. There's always some valuable lesson to be gained from watching my videos. So keep subscribing. Click on the like button on the YouTube there. And take care, everyone. We'll look forward to having another video for you next week. Bye for now.